This week, as we speak, the price of gold is consolidating above the 1,700 an ounce level, and it's mounting another attack on recent resistance at $1,750 the ounce. Silver, meanwhile, has closed the gap considerably, having risen a whopping 62% since the March lows. The gold to silver ratio, having been at a record high just below 130 times just recently, is now back at around about the 95 level. Analyst Dan Popescu joins us now. He's an investment research consultant with a specialism in gold, silver, and also the FX markets. Dan, it's a pleasure to have you on, and thanks indeed for your time joining us there from Toronto. I want to begin, first of all, with why gold? Why should we be interested in what is, in effect, just a metal?
It's not just a metal, it is a money of last resort. It's a currency. It has been money for thousands of years, about more than 5,000 years in Egypt and in the Middle East. They were using gold nuggets, a weight. And if you know that most of the currencies in the old time, they used to say, like in Great Britain, they say the pound, which is a weight of silver, a weight of gold. So it has been money for thousands of years. Recently, in the 1980s and 90s, a new theory came out that mathematically we don't need real things, that the dollar becomes now the standard money, the currency for exchanges. But we've seen in 2008 that failed, and that the dollar collapsed, and in last resort during the crisis, central banks in Basel, through the Bank for International Settlements, started using swaps of gold, and they have increased recently, in which central banks use gold as a support rather than the currency. A famous author, Mr. Bernstein, wrote before 2000 that the system now is based on the dollar, and there is not going to go back to gold. But he also mentioned at the end of his book, in the last chapter, the last paragraphs, something interesting for somebody who was already up close to 100 years, so with life experience. He said, however, if the dollar, the euro collapse, then we'll go back again to gold. Unfortunately, he died in 2008, exactly when the crisis came, and his prediction that he didn't want to believe it's going to happen just happened. The dollar system started collapsing, and gold started again to be the pedestal of the international monetary system.
I'm interested to pick up on the point about the authorities of central banks buying. I want to bring up a chart of the world official gold reserves. These are reserves held by central banks. And clearly on this chart that you've prepared here, with data coming through from the IMF, you can see clearly the rise up to the mid-1960s, and then this tail off to that point of 2008. And then this pick up again. What should we take away from this? What do we know about what's happening in the gold markets that we should be interested in, which gives us some sort of feed through into what's been happening with central banks?
Well, first of all, just to say that gold market is like an iceberg. It is most of what we know, what we study, and the difficulty for people like me is that the most of the gold above ground is unknown. It moves around the world, but we cannot quantify it because it's in private hands in Asia, in China, in India, and we estimate around 200,000 tons, metric tons of gold above ground. And that amount of gold is there to come to the market. It doesn't come, but it can come to the market. And that, for analysts, is very hard to analyze it. Central banks is the most liquid one with ETFs and mutual funds, the most liquid gold that could come as a surprise at last moment to the market. So that's why it is important. It remains in the monetary system as the pedestal of the international monetary system. And now with the dollar collapsing, and that the euro it's not an alternative, and the Chinese yuan is not an alternative, central banks have been starting to move back, sell dollars, and move back into in their international reserves into gold specifically. And more specifically, in the 1960s, 50s, it was the Western central banks accumulating gold. Now it is Russia, China, India, what we call the developing countries. We used to call them emerging markets. So now they are accumulating, and they are accumulating as a hedge against the US dollar. The past president of the European Central Bank, Mr. Draghi, 3 years ago, in a question in Boston said, he was asked, what do you think about gold? And he said, for us Europeans, gold is a hedge against the US dollar. He said it straightforward. Gold is a hedge against the US dollar. And we are right now in a crisis of the US dollar, a big crisis. And that's why countries, I was reading this morning an article from Hong Kong, in which it says that China is asking itself if Donald Trump might not freeze the assets of China. There's been rumors, there's been people close to Donald Trump, including Donald Trump, making veiled threats of freezing the assets and confiscating the assets of the Chinese, as they've done it before with Iran. So that's why you have now central banks around the world, Europeans repatriating their gold from New York, and China, Russia accumulating gold. But as I said at the beginning, it's still very opaque. I don't trust the data from China. I have to look at it, but I think that they are underestimating their reserves, official reserves. They say there are about 2,000 tons. I think they already have somewhere in a different account that they don't have to declare to the IMF. They have another 4,000 tons. I think China has by now between 4,000 to 6,000 tons of gold. They consider gold as a strategic asset against the dollar, like Draghi.
Okay, put that sort of figure into some sort of context for us. What about what we believe the Americans to hold? What about the British, the other European economies that previously had been seeing their currencies pegged to the gold standard? What sort of values are we holding in the West?
In the West, we have sold quite a lot until 1965. The crisis in 1968, when the London gold pool collapsed, there was a run, started with the French, a run on exchanging. You remember that in the old system, the dollar was pegged to gold at $35. In other words, United States was required to exchange the US dollars to the official rate of $35 to other central banks, not to the general public. That was stopped in 1933. But for the central bank system, the dollar was equivalent, and that's why the phrase, the dollar is as good as gold, because the dollar was fixed at an exchange rate of $35 for 1 ounce of gold. In 1968, the London gold pool, which was created in 61 to support the US dollar, to support this system, collapsed. Between 68 and 1971, there was a period where central banks were rushing to New York to exchange their dollars into gold, starting with France, with General de Gaulle. And in 1971, United States realized it cannot last, that in about 6 months, they will have no more gold. So they decided to delink the dollar from gold, and they stopped the hemorrhaging. And that's when United States stopped and still has 8,133 tons of gold, which is quite a lot. The European Union or the Eurozone, it doesn't matter, because most of the gold in Europe is in the Eurozone. The Eurozone has about 10,000 tons, and the European Union about 11,000. So it's about 1,500, 600 tons more for the whole European Union. So the largest holder of gold in the world of official reserves, it's the European Union. Second is United States with 8,000, and the challengers now it is it is China and Russia. They have, as they say officially, 2,000 tons around, but I think they have more than that, but in a different account. And there is another enigma in the data that we have, which is other countries who do not declare accurately their data. North Korea, Iran, Saudi Arabia, which I think there are very big holders of official gold reserves, but they don't make it public. So recently, China has declared a war on the US dollar standard, and the Russians are very close to the Chinese, and they want to stop the US dollar exuberant importance. They want to change the international monetary system. And it's evident that somewhere in 2004, the Chinese have declared that they will not be able to do it without gold, and they are using gold to create and to push this new system, new international monetary system, based on something real, something fundamental. I'll diverge a little bit because recently we had cryptocurrencies, but it seems that cryptocurrencies are collapsing, and the theoretical ones like Bitcoin and Ripple, which are based on theory, nothing real, are collapsing. Even in the cryptocurrency world, they are switching to what they are calling stable coins, which stable coins is nothing else than fiat currencies in crypto version. And the Chinese are working on that. We have information that they are already testing one stable coin, yuan, but everybody believes that they are using gold to support it because otherwise it will not have international acceptance.
I think certainly there's been a lot of talk within the markets about this idea as to whether or not cryptocurrencies are going to be the new gold and silver. And I know there's a lot of debate about that. And that's, I know, your view of where we are with that. Insofar as we go with that idea, stable currencies, is that the next generation of the crypto space? We've been hearing a lot about the fact that Bitcoin and Ether and Litecoin, they're just first generation. It's just getting us going. Do you think further down the road, the stable coins will ultimately overtake this need and drive to hold gold? Or do you think even in that situation, we've got no competition for those that prefer gold as a safe haven asset of ultimate ownership?
Well, I don't express my own opinions. I look at the data, and the data talks. And the data shows that originally Bitcoin and all those theoretically designed on a mathematical formula, cryptocurrencies are losing momentum, and it has been happening for the last 8 years. The shift in the cryptocurrency field has been going from Bitcoin and Ripple to what they call stable coins. They are not stable, but what they mean by stable coins is a return to the fiat currencies, but rather than being in the form of paper, now they are in a not digital, because we've been in digital form for 40 years. People don't realize it. They think that we're moving into the digital world. I've been using, and you've been using, digital dollars for 40 years already. What we are changing now is in a more advanced form of digital currency, a digital cryptic. Each dollar is identified with a code and can circulate electronically, but we know each one, which is the case for Bitcoin, but it is based on a fiat currency like the US dollar, the euro, the Swiss franc, the Japanese yen, or like the Chinese are doing with the yuan. And there has been an announcement about a month ago, I think 2 months ago, the IMF, in collaboration with European central banks, have created a committee with the Bank for International Settlements in Basel to create a working group to study the potential of a crypto payment system, a crypto international currency, let's say a crypto SDR currency. So they are studying it. United States refused, typical of Donald Trump of hating anything that's international, refused to join the group, but has created, the Fed announced, Mr. Powell, that they are creating their own study group in United States. So you have the Fed studying a crypto stable coin, fiat stable coin. You have the Europeans with Japan, Canada, and the International Bank for International Settlements working on a payment system, and you have the Chinese and the Russian working together on one of those systems, because the Russians and the Chinese are working together. So it is evident that the central banks will take back control on the cryptocurrency world, away from the original anarchist, decentralized Bitcoin idea, where Bitcoin, that nobody controls it, nobody owns it, nobody, it floats by itself, which is I call it a beautiful utopic idea. I don't dismiss it, but I think it's utopic, like the ideal of communism that was imagined at the origin, the hippie generation, which dreamed of a communal world society where there is no more government, everything is beautiful, the fault is the government. I think that that's failing, and I think that a combination of gold-backed cryptocurrencies pushed by central banks will be the ones with the IMF that will take over in some form. I don't know yet how.
Okay, do you want to quickly return, if I can, to take a look at the charts? I want to bring this gold chart back up again, as I said, past the 1700 level, and silver has made these enormous gains since the low point that we saw back at $11.30 in March this year. That's 62% gain. Now, what this has resulted in is this gold to silver ratio fall. We had this chart here that we've got here goes back to the highs that we saw on the 15th of March, just shy of 130. Now it's only 95 times. In other words, the price of gold and the price of silver related to each other is 95 times. Just what does this mean? Why should we be interested in the gold to silver ratio?
The gold to silver ratio is used by traders who do kinds of hedging their positions between two. You can do it with four metals. You can add platinum and palladium. So that's why it is actually used. It's also because historically, for thousands of years, going 10,000 years, the three metals that were currencies was gold, silver, and copper. People ignore copper, but the three of them work together for thousands of years. They have been identified as money throughout history. So what comes is that we are still looking at the relation between gold and silver. And as I mentioned earlier, in a monetary crisis period, silver increases its demand as money, as a currency. It abandons its industrial aspect, and the demand for it as an investment, we call it in North America, but it's incorrect. It is monetary demand increases. So if gold starts moving up because of the monetary crisis, silver will follow right away. Right now, people don't believe yet in this collapse of reset, not necessarily collapse, but reset of the international monetary system. But once gold gives the trigger, which I think it's when gold crosses in US dollars above 1920, which is the all-time high, historical all-time high. When gold crosses that level, what will happen is that silver will start moving up at an accelerating speed, overtaking gold and decreasing the ratio between gold and silver and taking it down. I wouldn't be surprised to see it down somewhere at the 60 or 40 level. In the last stages of the crisis, where gold still goes up, but silver moves on steroids much faster than gold.
So let me just quickly return to that comment you said about the reset of the financial system. What's going to be the catalyst of this, and what effect is that going to have? Ultimately, presumably, it pushes up the value of these precious metals we've been talking about. You say you're an analyst and you don't make your own predictions necessarily, or your expectations and forecasts, but what are you hearing in terms of this reset and what it will do to gold prices?
Well, I made my prediction about in 2004 when I returned heavily and actively in the gold sector. And I said at that time, when I looked at the debt level around the world of all the countries, including United States, I said it's going to be a reset in the monetary system. And I see gold within 15 years somewhere around 5,000, 4,000 to 6,000, I said. Well, we are at the end of that range. It hasn't happened yet, but the information and the data that I've been following didn't make me, I'm a physicist by education, so I use the scientific method. I use the method of testing my hypothesis and see if it is being destroyed. And year after year, it has not. So I still believe we will see in the next 5 years gold somewhere around 5,000. But the recent crisis of the coronavirus has created an explosion of government debt. We've gone socialist, even in the United States. They call it today state capitalism. But state capitalism is the same thing as socialist, an incredible intervention by governments into the economy. And you see it in the United States. The economy today is the stock market and it's the Fed. The Fed determines, which is exactly in a socialist society. And we are printing, the idea of printing money, devaluing the currency against real assets has become an acceptable idea, even in the conservative movement, the right movement of Donald Trump in the United States. They now accept the idea of printing. We call it printing money. It's not really printing money. It's devaluing the currency by creating millions and millions of extra dollars to devalue the currency. So it's this devaluation of currency that will bring gold to a level of 5,000 at least. Now, if you look at a chart of the value backed by gold, before 1971, it was backed about 40% by gold. If we back it 40% by gold, it means a price of gold around 5,000. If we back it 100%, the value should be around 10,000, 12,000. So those who say that gold should be around 10,000 are not completely wrong. They are assuming that we'll return to something real of value, which will demand a devaluation. It's not an increase in the price of gold. It's a devaluation of the fiat currencies compared to all real assets. Gold, as Professor Fekete said, it's money because it's the most marketable asset. It's the most marketable thing. So that means that gold, silver, your house will not be better. Your house will not be worse than gold, but it is not marketable as well as gold or silver is marketable. So it's real assets that don't go up in price. They stay the same towards each other with small fluctuations in demand and supply. What goes down is fiat currencies like the dollar, the euro, the yen, the yuan, all the fiat currencies. And the debt amount is what will push a devaluation, not just of the dollar, but all the fiat currencies around the world. And that will bring them in fiat currencies to a level of 10,000, maybe even more than 10,000. So that's what we need.
Okay, one final question. We've got to wrap this up, unfortunately, but one final question I'm really keen to find the answer to is you have been in the gold markets, I understand, since you were at the age of 12, I believe, 1960s. Just tell us what you're doing at the moment in terms of your investment portfolio when looking at gold and these precious metals. What do you hold? Do you hold coins? Do you hold bullion? Do you hold shares in gold producing companies, ETFs? What is it that's your favored preferred choice of investment opportunity?
I have to make a distinction in what you just said, which is a typical North American academia of economics definition. You said investment. I would say a more general savings. Gold, physical gold is money, cash. Cash is not an investment. When I invest in a business to make a profit. When I put money in cash, it is to stay there as a hedge. So I don't expect my cash to make profits. I speculate in cash against other currencies on a daily basis, but that's not an investment. That is speculation. That's a different terminology that you should use. So speculating in gold, silver, whatever you want, Bitcoin, you can do that, but that's not an investment. When you invest in a business like Warren Buffett says. You invest, he says, I don't like gold because gold is cash. I like to invest. So investing, you invest in a business. So if you want to invest in gold, that you take risks. You invest in gold companies who store gold and charge you a fee. You invest in companies who mint gold. You invest in companies who transport gold or silver because you want to make a profit, or you invest in a jeweler who buys the physical gold, transforms it in a jewelry, puts a profit and sells it to you. That is a business. You invest in businesses. You don't invest in cash. You don't invest in holding dollars under your mattress. When you keep dollars under your mattress, you actually save. You are not investing. So that's the difference in conception. Chinese, Indians, they understand that. They don't say, I'm buying gold to invest. They say, I'm buying gold to save it. And Americans, they say, you invest every day. You invest in your family, invest in everything. Everything is an investment. It's a speculation. It's different philosophies, okay? So I don't invest in gold physically. If I want to invest in gold, I buy gold mining companies. I buy internet trading platforms who charge you a commission. I buy companies who transport gold. There are businesses. If you want to speculate, if I want to speculate, I use ETFs, I use derivative products, but that is for speculation. So in this situation of monetary crisis, in what you call an investment portfolio, I recommend the historical ratio that dates thousands of years, was transmitted to me by my grandfather and by my father, which says, put 10% of your assets in gold and pray God you never need it. Now that type of concept is for physical gold. You keep it under the mattress, you buy it physical, and you pray God you'd never need it. And like Mr. Draghi said, the gold is a hedge against the unknown, uncertainty. So since we are very close to a crisis, I want to increase that 10% in cash, in physical gold, silver, platinum. If you want, you can do a ratio or you can pick one of them, okay? So I would increase it. Once the reset has happened, I'll bring it back to 10%. So this is the way I see it.
Dan, it's really interesting having had an opportunity to talk to you, and wise words indeed. And completely right to correct my terminology there in that last question. But thank you so much indeed for joining us. It's been a pleasure. I'm going to look forward to hearing this interview again, just to analyze further what it is you've been telling us. But as I said, a salutary lesson in how to approach this market. That's Dan Popescu. He's an analyst. He's joining us there as an investment research consultant with a specialism in gold and silver and the FX markets.